What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we're starting to see the pullback as price action closes below some critical support. Today I'll be giving you some very critical support levels you will want to pay attention to during this pullback. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, thank you again for hitting another 2,000 likes on the video. We've been nailing this entire bull trend, and now that we're getting the pullback, I'm going to walk you through exactly what you need to be paying attention to and the exact support levels you will want to be watching. So please remember to smash that like button and let's get another 2,000 likes on this episode. Also remember, in the Stocks channel Discord, I'm giving you intraday callouts, and this morning when we did gap down below the critical support, I instantly posted an update that said if we start to sell off at the open, we may hit the bottom of the channel by around lunchtime. This is going to be a good day to scalp and be very patient because you do not want to try to catch a falling knife below the critical support level. Now, looking at the chart, that instantly told you to go risk off for the day and just be patient or even short the market using that as your risk level. And then right on cue around lunchtime, this is the same exact arrow that I drew on that chart you were just looking at. And we did hit that price target and we started seeing buyers stepping in at that level. So I'll remind you, if you want these intraday updates and you want to trade with us in the Stocks channel Trading Discord community, you need to get in the Discord server, which you can find out how to join by clicking on the link below. I give a lot of intraday updates and you're only seeing a fraction of my information and my charts if you're only watching the episodes. So if you want those intraday updates and you want to trade along with the Stocks channel community, you need to join that Discord server. Alright, so jumping back over to SPY, I know many of you have been following along and you are very well informed on exactly what we're expecting. But if you are new to this channel, we follow price action and trend. And right now we have to acknowledge the fact that price action is starting to break through some critical support. So we instantly need to get more risk off. Remember, our risk level for today was at SPY 427 and we instantly gapped down to SPY 425, which was our risk level from yesterday. So that instantly told you from the opening bell that you needed to be more risk off today. And that is exactly what the update in the Stocks channel Discord told you to do. So the definition of risk off is go more cash heavy and less long exposure, because we never know how far these pullbacks are going to go. And that's why I call them a falling knife. Just like you can imagine, you don't want to bother trying to catch a falling knife because that's how you get cut. And right now below support, we do have a falling knife scenario. So what you want to do in this scenario is, first of all, you want to respect this arrow that I drew on the chart, which tells us where SPY can go by September, because there's a real possibility that the rest of August gets very choppy as we chop around and start digesting some of this bull run, which means we could go through a very choppy consolidation phase. And one of the ways that could look is somewhat like a bull flag between the support and resistance, and we could start to build a triangle before we get enough energy to go battle the big brain bear, which is up there at SPY 435. Now, either of these scenarios are valid, which means you need to understand both of these scenarios and you need to be prepared to react to either of them. So in the bull flag scenario, we are likely just going to chop around between about SPY 420 to 421 all the way up to about SPY 430 and just continue to go sideways, which is going to be a very boring and choppy market and likely cause a lot of retail traders to lose a lot of money because there will be no well-defined trend. So if we get the choppy market, you are going to see SPY pinned between about 420 and 430, and we are not ever going to see price action breaking decisively in either direction. So you need to write that down and understand SPY between 420 and 430 is your trading range in the sideways consolidation. And if we don't get this flag consolidation pattern, then you are instantly getting more risk off below SPY 421, because that means we're coming down to 416 and then the gap fill just below 413. Now do keep in mind, I did a back test and there is a video on how I did that back test and exactly how I got the data. And the average drawdown from that back test does take SPY down to about 406, which is also where our 50 EMA is. So what that means is you need to be prepared to manage your risk from today's close all the way down for about another 3 to 4% drop, which is actually not that bad all things considered. Now there's going to be a lot of noise and there's going to be a lot of bears that come out of the woodwork because they think this means the bull market is definitely not possible, and this little tiny red day means that we can never go back into a bull market again, and you need to block them out and follow price action, because if you look from the closing high to today's close, we have only dropped 1.8%. So what that means is if you went all in your account at the absolute closing high of where this bull market has taken us, and you sold everything today, you are down only 1.8%, which is absolutely peanuts. So do not for 1 second think that just because we're seeing some red day that you need to panic and you need to just completely load up on short positions because we're going right back into a bear market. That is completely baloney, and the price action has not yet implied that we're going for a deep plunge lower. If anything, this is going to be a very mild pullback, which could take us down to about SPY 408 or 406 in one of the worst case scenarios. Remember, this is the average drawdown, which means there is no guarantee we need to go that low. And as you can tell from the Bollinger Bands, we can't even get to the max drawdown signal yet because the Bollinger Bands aren't going to allow it, which means we're going to see it coming from a mile away. So you need to remember that we only trade objectively and we only follow price action. So we need to take this day by day, and we're not going to try to predict anything. We are simply going to let the price action do all the talking. So right now, that means your critical support levels on SPY are at 421, 416, which is also going to be our 20 simple moving average, which is going to make that additional support. And then below 416, you'll be looking for this gap close, which is right around 412.75. That is a lot of support, and we still do have a bull trend. So I do believe you are going to see buyers stepping in at support. So for that reason, you can try to buy the dip off support, but you need to understand the concept of a falling knife, and you will want to validate that support is holding before you go in too heavy, which means you will want to hammer down to those smaller time frames, which is exactly what we're doing in the Discord server, giving those live updates. So keep in mind, this is a pullback in a bull trend, which means there will be buyers at support. This is completely different than the rest of the year where we had a bear trend and there was sellers at resistance and there was just no way that you should risk it buying at support. This is a totally different market now, and we now have a bull trend, which means there are going to be buyers at support. It's going to be very important that you understand this concept, because if you just start loading up on short positions, you are going to get burned very badly, and I have given so many reasons why that is a bad idea in a bull trend. So I'm telling you right now, it's going to get very noisy and the bears are going to get very loud because they finally see a red candle. But if you look at the chart, any bear that has shorted on August 10th or earlier is still negative on their short position. Just put that in context real quick. Anybody that shorted on the left side of the screen where I currently have the white line is currently negative on their short positions, which means there are still a ton of bears that are still bear trapped. That gives all of the power to the buyers and all of the power to the bulls. And that is why SPY 421 is going to be such a critical support level. So there is a real possibility of that bull flag scenario where we just ping pong around between SPY 420 and 430 and completely roast all of the bears that are still bear trapped and make them capitulate and give up on their short positions before we go any lower, or possibly that will be the low before we go to SPY 435. So I know I spent a lot of time going through these scenarios, but it's important you understand them, and it's important that you let price action guide you on which one is playing out. So just a real quick recap, be prepared for SPY to go down to 406, which means you should not be taking on too much risk just yet, but you will want to wait for a breakdown of confirmation in the price action below the support levels given, which are SPY 421, 416, and 412.75. Jumping over to the NASDAQ 100 triple Qs, we were down 1.95%, and you can see the triple Qs also closed down below the support level, which was right there at 324, and we did close just below right around 323, which is also the top of the gap below. Now keep in mind the 20 simple moving average is crossing through that gap, and we are breaking out of the resistance trend line. And when you do break out of the resistance trend line, it is very common to get a back test of that level as support before you go any higher. So there is a real possibility we see the triple Qs filling this gap and retesting the breakout right around 319. Now keep in mind the 20 simple moving average is going to be above 320 by Monday. So there's the possibility we don't fully close that gap, and there is no requirement that we need to fill that gap. So do not get hung up on the fact that there is a gap below. So there is going to be critical support on the triple Qs right around 319 to 320. And we need to break back above 324 to start regaining some of that bullish momentum. So think of the triple Qs as a trading range between 319 and 334, because it could get very choppy and we could just go sideways between support and resistance before we get a breakout. Below 319, you'll be looking for 314 and the 50 EMA right around 311, and you're going to just stay a lot more risk off while we're below 324. Getting ready for a deeper pullback or a very choppy sideways consolidation, and we'll know because the price action will confirm which scenario we're getting. In the Dow Jones, we were down 1.04%, coming right back down to that support zone right around 336, and we did break out of the consolidation wedge to the downside, and we have a gap to fill to the upside right around 339. So for that reason, use 339 and 341 as resistance, and if we break above 341, the next price target will be the gap fill at 347. If we break down below support at 336, look for a retest of 333 and then the gap fill at 329. But do keep in mind our 20 simple moving average is crossing through that gap, which is going to give additional support at 333. On the Russell 2000 IWM ETF, we were down 2.15%, and we can also see a loss of that critical support breaking down below the support trend line and also closing down below 196. From here, we'll likely come down to fully close the gap at 192, which is also going to be our 20 simple moving average, so I do believe that's going to be a very strong support zone. Below that gap, we have support at 191, and below 191, we are getting a lot more risk off for what could be a retest of 182 or the 50 EMA at 186. Upside resistance will be at 201 and 205 if we do start to get the bullish bounce. On the ARKK ETF, we were down 5.92%, and ARKK had a very strong sell signal today because we're losing the bull trend, and we also lost the critical support at 47. Remember, that support at 47 defined the bear market, and now we are below that level yet again. So we cannot say that the ARK ETF is out of the bear market while it's below 47, which means it could be coming all the way back down to 36 or 33. So for that reason, I do not suggest touching this ETF while it's below 47, and we are losing the bull trend, so we no longer have any advantage from the trend or the price action. Now with that being said, there is a gap to fill right around 46.8, so there is the real possibility we retest the breakdown, and if we fail to break back above 47 and get rejected, that should give us signal that it's ready to get shorted and go down for the next leg lower. So risk off below 47, and you can also short this ETF at 47 if we do get rejected from that resistance. On the VIX, we were up 5.21%, and we see the VIX jumping back above that level at 20, but overall you can see a tall tail on the top of that candle because the VIX was getting crushed as it approached the 20 simple moving average, and this is actually going to be a bullish indication. Keep in mind that if we're getting high volume panic selling, we're going to see the VIX spiking above 24, and so far we barely see the VIX spiking above 20, so overall this is still going to be relatively bullish. Now you have to respect the fact that the VIX can continue to spike higher, so watch it very closely, and if the VIX continues to close at the high of the day, that will tell you to continue to stay more risk off. You're getting a lot more bullish the next time the VIX crushes down below 20. On Bitcoin, we're currently down 8.3% as Bitcoin is flushing down through that support trend line, and we're also breaking the support at 21,600. We don't have the candle close just yet, but we can obviously see high volume selling, which increases the probability Bitcoin is coming back down to support at 19,000. So be cautious while Bitcoin is breaking down, but I do believe if you're buying at these levels and you're going to be holding for the next 2 to 3 years, that you're going to be just fine. But if you're a short-term trader, you need to respect the fact that we're breaking down through support and losing the bull trend. You can get a lot more bullish the next time we break above 25,000. Continuing with our big tech hot stock names, we have Amazon going down 2.86% and closing just below that risk level at 138 and getting very close to the 20 simple moving average at 136. So for that reason, because we have the bull trend, I do expect 136 to be very strong support. So do get a lot more cautious if that does not act as support. It's going to be a risk off sign if we break right through 136, which means we could be coming right back down to fill this gap or retest the 50 EMA right around 128. The next bull breakout will be above 144 with the upside price target at 151. On Microsoft stock, we were down 1.39% as Microsoft is still finding support right at the top of that gap right around 286. But if it continues to go any lower, you're looking for the full gap close at 283, which is also going to be support from our 20 simple moving average, which is going to be a great risk reward setup while we have the bull trend. If we break below 283, it's getting a lot more risk off for a retest of 275, and the next bull breakout above 290 should send us to our price target at 296. On Nvidia stock, we were down 4.92% today, closing below the 20 simple moving average and testing this very critical support trend line and 50 EMA at 178. If this level breaks down, it's instantly risk off for a retest of 165 or 161, but as you can tell, the Bollinger Bands are currently not allowing price to go that low, so there is a real good possibility that we do see a bounce off 178 and get that bull breakout back over 182 with strong resistance just above right around 191 and then 196. So watch this very critical support, and this is a great level to start adding on risk as long as this support level doesn't fail. On Tesla stock, we were down 2.05% today, and Tesla had a perfect test of support at the 20 simple moving average. And as you can tell, we did see buyers stepping in at that level. So there's going to be strong support on Tesla right around 878 to about 882. and as you can tell, we are closing below 900. So your trading range is going to be about 878 to 904 until we get a breakout in either direction. We're getting a lot more bullish above 904 with strong resistance at 928, and above 928 we're looking for the next price target at 970. If we lose support at 878, look for a retest of 864 and then 839. And do not forget about the possibility that we are building somewhat of a bull flag before we get the breakout that could send us back up to retest the all-time highs. On Apple stock, we were down 1.5% today, and Apple is getting rejected from that resistance trend line and closing back down below the 5 EMA, which is significantly increasing the probability we're coming back down to retest this support right around 170. If we lose support at 170, look for the gap fill at 166, which is also going to be the 20 simple moving average, and I do expect that to be very strong support. Your bull breakout will be a break above 175 for the next price target at 179. On the financial sector, we were down nearly 2% today, getting rejected around that resistance trendline and coming back down to the 13 EMA, but overall we still have a very strong bull trend. Look for the gap fill below if we continue to trend lower. The industrial sector was down 1.29%, and overall we still have a strong bull trend, but if we do lose this support right around 99, it is possible we come back down to the 20 simple moving average and fill the gap. The healthcare sector was up 0.27% today, still in the bull trend and still with the bullish price action, with the next bull breakout above 134. The energy sector was flat on the day, going absolutely nowhere, and still closing right around this resistance at 79.5, with the next likely upside price target to fill the gap at 81, and we did regain the bull trend, so you can stay bullish in the energy sector as long as we're above 76. So jumping back over to the S&P 500, do not be scared just because we're seeing a red day. When you zoom out and you look at the overall picture, we are only down 1.8% from the closing high, and that is nothing to lose your mind over. Have a plan and know the critical risk levels, which I gave you on the SPY analysis, and make sure you understand this is a completely different market now that we have the bull trend. If you're trading this market like you were trading it in the first half of the year, you need to understand that it is a totally different market structure, and we now have higher lows and higher highs, which we have not had the entire year. This is a very important concept to understand when you're following price action and trend, and you do not want to get overly bearish while you still have a bullish structure. For that reason, you want to remember that people are going to be buying the dip at critical support, which means you need to be very cautious trying to short the market. And if you are shorting the market, make sure you understand your risk and reward and make sure you're taking profits quickly. Without a doubt, short sellers are starting to make money, but that can change very quickly if we make another higher low and break out to another higher high, and we will have more and more bears that continue to get trapped in this market, which will only make the bull trend stronger. So be very cautious and have a very solid trade plan and be prepared for any scenario, and always use great risk management. Remember, I do have the Stocks Channel Discord where I'm doing intraday updates and giving lots more charts and information that help you trade during the day. So if you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. I also have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information about Bank or want to subscribe, you can click on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.